Ladies and gentlemen, stocks drop 1,000 points as the new inflationary report comes out. But that doesn't make sense, ladies and gentlemen. What are you going to do about it? Now that stocks dropped 1,000 points, when we're talking about stocks itself, we're talking about the Dow Jones. The S&P, not the S&P, but the NASDAQ was the one that really got beat up. That's our technology companies. But what are you going to do? What are you investing in? Stocks drop 1,000 points on our new CPI report. So today we're going to go over that CPI report, which is our inflationary report. Why does this have an effect on stocks? And we're going to look into see what does all of this mean? But ladies and gentlemen, if you haven't done so already, y'all know what time it is. Please go ahead and make sure. Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. I'm not going to be before you guys and girls too long. I'm getting ready to run to an event here shortly, but I had to do my content today as I'm very excited about days like this. You talking about the S&P 500, NASDAQ, and the Dow Jones. Dow Jones itself stressed away 1,000 points. NASDAQ dropped, I believe, 5%. S&P dropped 3%. NASDAQ leading that way of this new inflationary report. The new inflationary report, S&P, not CPI, I'm sorry. The Consumer Price Index came out by the Bureau of Labor Statistics. Ladies and gentlemen, why does this is such a big deal? Why did the stocks drop? It's a pretty common thing. We know that interest rates are continuously to rise because they're trying to slow down inflation. The higher that inflation goes, the higher they raise interest rates. The higher they raise interest rates, the more it slows down the economy. Notice if you own a house or looking to buy a house, you're seeing the interest rates on houses starting to go up. You're seeing the housing prices starting to peak, and some are starting to drop. You're seeing the markets this year all in a downward spiral in a retracting phase, and this is all in an attempt to slow down the market. Companies start to, for prime example, when interest rates go higher, that means that people have less money, right? People have less money. When people have less money, I'm sorry, ladies and gentlemen, I said that backwards. When inflation starts to increase, people have less money, meaning they're paying more money for goods and services. So this is starting to eat up on my discretionary income. So I can't go out and buy that new iPhone, the new iPad, the new whatever, because gas prices are going up, food prices are going up. So that's taking away my disposable income. That means things like leisure, things like retail, I'm not going to be able to purchase. So when you're seeing inflation do this to people's pockets, and also it hurt people who own fixed incomes and people who are getting ready to retire. When you're seeing inflation to start to do this, you're now going to see what? The government stepping in with interest rates, raising up the interest rates, which is good for savers, bad for investors, because when you raise up interest rates, what's going to happen to companies? It makes money harder to borrow. Money becomes more expensive to borrow. So when companies can't expand like they want to, in reverse, you're seeing this translated to the stock market. So it's like a dog chasing its tail. As inflation goes up, interest rates go up. As interest rates go up, it cools down assets and brings down asset prices. Why you are seeing the S&P 500, NASDAQ, and the Dow Jones have horrible days, shed off 1,000 points. But y'all haven't seen me live in a while, but I'm live today because I'm excited when these type of things start to happen, because this is when I start to execute on my watch list. This is when I start to go in and say, hey, you know what? I've always wanted to buy this. I'm going to jump in and get it today. These are my buy days. When I see all of the markets are down, inflation, yes, it's here. Yes, it's a problem, but we would get over this too. But so without further ado, what we're going to do is we're going to tap in and we're going to head over to the Bureau of Labor Statistics. And we're going to take a look at this CPI report that came out today. Right, and see what we can get out of this information. So if you go to the Bureau of Labor Statistics, you're going to see the CPI report. And I probably should have wore my glasses, but we're going to make it work. We're going to make it work. Here we go. Here we're going to go here. I want to make sure you guys and girls can see me. Okay. Yeah, we're going for the Bureau of Labor Statistics. Let me go ahead and take this thing off. Let's see what y'all saying in these streets out here. Y'all, if you're coming in, don't forget to hit that like, subscribe, comment, and share button, and tell all your friends and all that good stuff. What's going on there, Jonathan? I think that's Jonathan White. I think how you say your last name. Thank you for tuning in, my man. Appreciate you. Give you a round of applause. Tell me where you're coming from, Jonathan. I'm out here in Denver, Colorado. So so you see this inflation. So here we go right here. The consumer price index for all urban consumer prices rose 0.1% in August on a seasonal adjusted basis after being unchanged in July. The U.S. Bureau of Labor Statistics, because guess what? It was unchanged in July. So we said, oh my God, has inflation peaked? And inflation was like, psych, no, it's back at not a lot, but at 0.1%, meaning that on the next Federal Reserve meeting, they're probably going to raise another 75 base points. They might do 50 base points, but I can bet on 75 base points. So here we go here. Statistics reported today. Over the last 12 months, the all items index increased 8.3% before seasonal adjustments. The increase in shelter, food, and medical care indexes were the largest. Many contributors of this broad-based contributors to this broad-based monthly all items index. The increase were mostly offset by a 10.6% decline in gasoline index. So you seeing gas went down, but food went up. The food index continued to rise, increasing 0.8% over the month as the food at home index rose 0.7%. So here we go. So you're looking at this shelter. We have to have shelter. We got to have food. We got to have medical supplies. These are things that we have to have. So regardless of what's going on in the economy, people will drink and people will smoke and they will have a place to live. They will have food to eat and they will need their medical supplies. So for prime example, if I make $5,000 a month and the price of food goes up, the price of medical goes up, guess what? That just rose my bills that I have to pay every month. So that I may not go out and get on Amazon and buy that new pair of shoes. I may think twice about going to buy that new car. I may think twice about that new iPhone 14 coming out, as Apple did a big release. But I'm not thinking about that iPhone 14 when I got to go pay more for food and shelter and medical. Now, the good thing is gas decreased for the first time. That gas was the hot item here going so far this year, but it seemed to be tethering off now. But you can stroll down here and see this whole chart here and to see who's at the all-time high coming in at August. So you're looking at August here. Let's see who's been running. Let's see who has the highest number here in August alone. In August alone, it looks like utilities. Utilities had the major increase there. And let's see who was the lowest. The lowest is tied between apparel and medical. It looks like 0.2, right? That's just for August alone. But if you look at it for the entire season ending in August 2022, in the last 12 months, who's been ramping the most is oil. Oil has, for the last 12 months, has been the one that has been killing the game. And when it comes down to inflation over the last 12 months, even though it had a decrease last month, and coming in last, the sector that has had the least over the last 6 months has to go to medical care, right? So medical care wasn't too highly affected by inflation, but we all felt it at the pumps going in to get gas in our vehicles and cars. So, new cars over the last 12 months as well. But you can see right here, food went up 0.8%. That's pretty high. Stay at home food away from home was 0.7%. Energy was up 0.9%. And, of course, you had gas go down a negative 5%. Did I say that wrong earlier about apparel? I'm sorry. Gas was the one that went down the least. Energy and gas was the ones who they were at a negative 10. So gas prices did fall off, but you are seeing food and shelter still starting to tick up its ugly head during these inflationary periods. Electricity starting to go up, utility. So right here, these are things that people got to have. People got to have shelter. People got to have energy. The price of you just living has just increased, right? So as you go down this inflationary, okay, Jonathan said, nice but close, Virginia. Richmond, what's going on out there in Virginia? Shout out to Virginia. Y'all tuning in here live. So right here, as you can see, you're seeing the food index go up. You're seeing apparel go up. So guess what? Everybody's expecting, oh my God, and this means that this is not the end of inflation. Interest rates are going to go up. interest rates are going to go up. It's going to suck money out the economy. Also, too, the Federal Reserve is selling assets off of its balance sheets. So right now, the Federal Reserve is pulling money out of the stock market at the same time. Let's not forget that, because during the pandemic, the height of the pandemic of March of 2020, they lowered interest rates. They pumped money into the stock market, meaning they started purchasing assets. Fancy word of pumping money into the stock market. Now in 2022, they're doing the opposite. They are raising interest rates instead of cutting them. They're raising them, and instead of purchasing assets, they're selling assets, meaning getting rid of these things out of the market, creating more liquidity inside of the market. So the market is going by two things. Ladies and gentlemen, these are peak times to buy. When I see things like this a year from now, we don't even know what happened. These opportunities don't come around that much. So these are opportunities where I'm like, woo, okay, let's see who got hit the worst. You look across the three major indexes, you will notice NASDAQ Technologies got hit the worst. Since NASDAQ and Technologies got hit the worst, who inside of NASDAQ and Technology got hit the worst? Retail. That's right. So when I see retail, I look at that and say, that's a gem right there, right? That's a gem right there, right? To go in and find a way to make me some money. So this is the way I look at it. Today, I was a big purchaser in blue chip. I don't like to get a lot of small nothing companies because I don't know if they're going to be able to make it through hard times. I get the large blue chip companies like Apple. I look how much Apple and Amazon got beat down today. Then on my riskier side, I did TQQ. That's a symbol for the NASDAQ. That's for the NASDAQ bullish, 3 times bullish leverage ETF. Very risky. Please research and do more knowledge on it. But it was at $25, $26. And I know as soon as the NASDAQ turns around, this thing will make me look like a genius. So right now, so I loaded up on the technology sector, which is Apple, Amazon, and a leverage bullish ETF. And I got a little bit of, conservative with it. Got a little DIA, which is Dow Jones, got a little S&P 500, the little dollar cost averaging. But this is the time, ladies and gentlemen, when the market is roaring and doing very well, that is when you're supposed to make your watch list. Notice all the good companies, all of those good blue chip companies. Google just did a stock split. Amazon did a stock split. Apple did a stock split. Tesla, I did get some Tesla today. Tesla got a stock split. Berkshire Hathaway is some of my clients I work some Berkshire Hathaway with because I know that's a big conglomerate. Nothing wrong happened. It's just that fear is starting to set in. This is your opportunity to execute. It's not about the idea that sets people apart from each other. It's your ability to execute, ladies and gentlemen. People always say, hey, I got $1 million idea. The $1 million is not in because the $1 million is not in the idea. The $1 million is in your ability to execute. Now that you know that the market is down, you see these type of days, I go in, lick at my chops, and this is when I start to execute things off of my my checklist, off my wish list. My oil, I'm a pretty big investor into BPT, collecting a dividend check, waiting for oil to ramp back up. I kind of called it on its way up. It kind of peaked at $25. Now it's down to $15, $16 range or whatever. But it pays a nice 20% dividend. So I hold on to it and to wait for oil to rally again. It may not rally this year. It may take 3, 4, 5 years down the line, but it will rally again. And I will stand by waiting on that. Let me see what y'all saying before I head up out of here and get ready for this event. Clarence M, let's see what you got to say here. I don't know where you're from, but Clarence M says, is this a good time to buy the dip? Would the dip go further soon? Now, here's the thing. When you say buying the dip, this is the hard part of buying a dip. You don't know when you're in a dip or a peak until it has gone by. So what I mean by that is you don't know when you fall off until you fell off, right? Right now, everybody think they're going to get better. They be like, man, watch, come January, towards the end of this year, you're going to see everybody in January. Man, 2023, this is my year. I'm leaving everything behind. 2023 and me, all these little rhymes or whatever, right? They don't realize that 2022 could have been the best year of their life. God forbids, let's say, so you don't know what a dip is until you turn around. So my thing is, don't try to find that bottom, because if you can pick the bottom, you got billions of dollars that you can make, Clarence. And if I could pick a bottom, or if I knew how to pick a peak, the best in the world don't know when we're peaking or when we're in that dip. So why would you even try? So just do a little, And when I can't go no more, I just sit back and wait. I just wait to be right. That's my philosophy. If I have cash laying around and I see the things like especially like $1,000 dip, I'll take it. It might just be a quick little bounce, but I'll put a little in, a little in, a little in, and then wait till I'm right. So, because you don't know where that bottom is. That happened to me March of 2020. I was like, we got some more to drop. I don't know how far it was going to drop. I don't know. So the thing is, why it's going down, you put a little bit in, a little bit in, a little bit in, a little bit in. And then eventually, when you run out of cash while it's going down, you just sit back and wait. And then when it turns around, then you can start to, look like a genius. So, but yeah, it's kind of hard to pick those bottoms and to pick those peaks. So I wish I could do that. Rolling Love, what's going on, Love? Love is in the building. I don't know what Love is at. Shout out to Love, y'all. With his beautiful family up here over there on Facebook. Good, man. Nice to see you. And nice to, he says he's writing notes. Yeah, definitely, man. Definitely take some notes. If you got a 401k, some of y'all going to sit here and try to build up an investment account. Y'all ain't going to beat y'all 401k. Let's be honest. Some of y'all are not. Because if you have an employee matching you in the military, you got TSP, you already got $20,000, $30,000, $40,000 already allocated. You putting $200-$300 a month. You might as well take that money, put it inside of the C fund or the S fund, which is common stock or small cap. Put in between those two and let it ride. You're trying to take your $100 or $50 or whatever, $300 and go buy the dip. If it turns around, your $300 is going. If it's, let's say the market turns around, you make 10%. 10% of $300 is $30, but 10% of $30,000 is $3,000. Right? I'm going to use myself. I have 6 figures inside of my TSP 401k from the military. It won't make sense for me to go out here and pull my money out and go put $100 here, $200, and $500 or $1,000 when I can just let the big snowball, continue to roll down the hill. Because when you roll down the hill, you get bigger and bigger and bigger. Hopefully, I'm making sense on y'all. Jonathan said, all I heard is make sure you walk with your eyes open. I like to run options on PFE, and it's looking delicious. You're right. I forgot. I didn't even get into the option trading. Let's go a step further, 2.0. Right now, the best thing about Amazon and Google, the best thing about the Amazon and Google stock split, the best thing about them is the stock split allows you to buy 100 shares at an affordable price. So if you want to do a covered call on Amazon, when Amazon was at $3,000, you had to buy 100 shares. 100 shares, you're talking about, you can do the math, right? $3,000 divided by 100, you put 2 zeros behind that. Look how much money you had to have 100 shares of Amazon. Now Amazon is at $130. 100 shares, look how much it costs you to get 100 shares now, right? It's more affordable, about 13,000 or something like that, right? If my math is correct, you could take that and now you can sell a call. Now that you have 100 shares of Amazon, 100 shares of Apple, 100 shares of Google, right? You can take that and sell covered calls. Hold a share, sell covered calls. So as the market drops, you're collecting that premium, right? A lot of people don't like to utilize, even though that's the most winningest strategy, people don't like to use that strategy because it requires you to have 100 shares of a company, and 100 shares can run you $10,000 to $13,000. So people are like, man, I got $100 or $1,000. I don't have 13, 14, 15, 20 grand to put on a stock. So guess what? They will go out there and get butt naked. And what I mean by butt naked, I mean go out there and buy naked calls, naked puts, which are very cheap, but is on the loser side of the game. So yeah. Clarence says, great advice. Thanks, Prince. Appreciate you. Next up, let me see. We're gonna run through these before I get it here. He said cover calls. Yep, cover calls. Yep, so what you got through talking about. He said, I've been studying my guy. Okay, Jonathan, I see you, Jonathan. Round of applause to Jonathan. Getting this money right. Hey, Jonathan. Because if you didn't know, Jonathan, this is what you're gonna do.
You're gonna learn today.
Yeah. So Clarence says, don't trade cover calls during earnings season. Yeah, no. Earnings season, that's when those calls options explode. that's when you start to do straddles. People are to get into straddles of just jumping in a different way. But if you're somebody that owns 100 shares of Disney and you're just seeing it drop, selling a cover call could be a way to make a little money from it by collecting that premium. So, okay. Hopefully y'all got something out of this. Hopefully I made some sense with this. I got to get running. Glad to be back live. I've been gone for here and there, but I'm glad to be back live and glad to see y'all in here. All 15, 20 of y'all that tuned in live to me. Appreciate y'all. I'm going to keep those interviews coming. Got a bunch of interviews coming, but I got to get out of here, get to an event. But I see you guys. Thank y'all for tuning in. Until the next video, y'all already know, go down to that Contribute app and contribute to my book drive to get my books, Wesley Learns to Invest, Credit, and Insurance into kids' hands all across America. Every dollar that you donate, the Contribute app is matching. So they're matching us all up to 10 grand. So you decide to donate $2, they're going to donate $2. That's $4. We're going to take those $4. We're going to buy a book and we're going to give them out to kids and schools and organizations to spread investing, credit, and insurance to children across the globe. You guys help me get to thousands of kids. Now I want to get to millions. Now let me see what you got to say here, Jonathan, before I roll out of here. He said, just have an insurance policy if you're going in naked. Puts and calls can help you exit. Yes, if you're going to go out there and buy a naked call, get a put because you just might be wrong. That's one way to do it too. Those things are called spreads. So you're right. Yeah, definitely get you a spread. So deep to get into spreads where you could do net credits, net debit, but that's a whole nother topic. But thank y'all for tuning in. Until the next video, podcast, cartoon, or whatever else crazy y'all see me doing around the globe. Y'all already know my name, Prince Dykes. I'm the Prince of Investing. Peace. Be safe. I'm out. And thank you.